Breaking news! The unemployment rate just skyrocketed from 3.5 to 3.7, but it's very, very, very confusing. So let's get to it. What you're going to learn today is maybe what the Federal Reserve is saying isn't really connecting to the markets, but maybe the markets don't care. If you don't understand that, let me get to it because today is completely confusing. Okay, so we see here, we know the Federal Reserve is doing what they're doing. They're raising rates to really crush inflation, crush the housing market, and also take a huge chunk out of the employment numbers. They want the unemployment rate to go up. Okay, so we look at that. How would an unemployment rate go up? Well, not many people getting hired. Okay, so when we have a better than expected jobs report, why does the market like it? I don't get it. Okay, so let's look at the details. U.S. payrolls surged by 261,000 in October, better than expected. So if we go to the economic calendar, it basically gives us the numbers. So you can see right through here, unemployment or the non-payroll or farm payroll numbers, last reading was 315,000, and that was a crazy number in the jobs market. But then everybody, all the analysts thought that that number was going to plummet all the way down to 200,000. So this is how many new jobs have been added per month. So the 315,000 is right here. And the expectations were 200,000. It came in at 261,000. So let's just dissect this right across here, okay? The unemployment rate was 3.5, all right? So the economists expected 200,000 jobs to be added, all right? But that would still bring up the unemployment rate to 3.5 or 3.6, okay, from 3.5. But it increased more than that. So you would expect, well, the unemployment rate wouldn't increase more than 3.6 or even go back down to 3.5. But it moves to 3.7 with a higher than expected jobs market. I don't get it, okay? So we're going to look into this and figure out what in the heck's going on. But what's this doing for the Wall Street and everything right now? Well, you can see the Dow Jones is just killing it right now. We go over to the bond market. Mortgage-backed securities are flat. So my expectations were if we had a robust jobs number, the stock market would plummet and mortgage rates would spike. And we're completely seeing the opposite, and I don't know why, and it's kind of scary. So let's get over. That's basically all the economic news that we have today. Let's see where mortgage rates ended yesterday, where we're going to pick up today. So we're going to see rates at 7.3%. These here, what you're seeing on your screen, is mortgage rates published by Mortgage News Daily. They post the national averages in each one of these cells. These cells are the top 6 mortgage products people use when they're purchasing a house or refinancing. So there's where they are right now. You can see that the 30-year fix right now is averaging 7.3%. I never thought I would say 7%. If you asked me last year or the year before, Dan, you expect rates to be 7% in 2022? I'd be like, you're crazy. Well, the Federal Reserve and the federal government is really screwing up things here. But let's just work with it and go with what we're served. Because if you got lemons, you got to make lemonade. So here's the top 6 products. If you want to see this report and get access to this, all you have to do is subscribe down below to my newsletter, or you can even have it linked down below for Mortgage News Daily where you can get it yourself. So if you like my videos, I know it's a short one today, but there's not too much content. I just want to give you information about the unemployment numbers and why there's a complete disconnect with Wall Street, the bond market, and the Fed. So if you like my videos, check out my podcast. You can go to whatever podcast you use. We should be on there. You should be able to find me. Just search Dan Frio or The Mortgage Update with Dan Frio, and you're going to find my shows, all my shows there to listen on your way to work, on your way home, and maybe just traveling along the roads. But if you want to find out more about me and my team, we are a mortgage company or a mortgage advisor. I'll say a mortgage advisor because it's a little confusing. We're actually a bank. But we also are a broker, meaning I'm set up with 84 of the country's largest banks, lenders, and mortgage companies. So what do? You call us. We can be like your lending tree, but you're going to use one person. You're not going to put your data into lending tree, and then they're going to sell your data to a ton of people. You're going to put your information, you're going to call in and give us your information. We're going to scan the country with over 84 of the country's largest banks and lenders. Like I just said, how do we do that? We'll find out. You can check this video out right here to find out more about that program. And if you'd like to find out more about me and my team, just go to therateupdate.com. And if you like what you see and you want to schedule an appointment, all you got to do is right over my head, it says book an appointment. You can also give us a call right over here, over my head in that section. And if you prefer to just apply online and get the ball rolling, you can do that as well. So thanks for watching, guys. God bless. Have a fantastic weekend, and I'll see you on Monday. Take care. Bye-bye.